So much. You are listening and watching Bloomberg Businessweek. It is brought to you by Audi. Visit your tri-state Audi dealer today and get behind the wheel of the Audi model you've always wanted.
Okay, we heard a lot from Fed Chair Jay Powell yesterday on the economy, the consumer, and how the Fed is thinking about rates. Here's just a couple of things that he said. Quote, growth of consumer spending has remained resilient. Check. Quote, the economy is strong overall and has made significant progress toward our goals over the past 2 years.
Check.
Check. Quote, we think the economy is in a really good place and we think policy is in a really good place.
Check, check.
Okay, so that's what we heard.
Sounds pretty good.
From the Fed. It does sound pretty good.
Right?
I mean, yesterday's market reaction notwithstanding.
Yeah, exactly.
For a check on how the consumer is doing, let's bring back Silvio Tavares, CEO at the Credit Data and Credit Risk Analytics firm VantageScore. It's a joint venture of Experian, Equifax, and TransUnion. Silvio joins us from San Francisco. Silvio, I wanted to talk to you because you have so much good data about consumer health. How would you characterize the consumer right now?
Well, Chairman Powell is spot on. The consumer's healthy, and that's good news. That's good news for us as consumers. It's good news for the economy. The challenge that we have seen and the big change is that inflation is more stubborn than anticipated. And that's the big thing that changed. And we heard from Chairman Powell, they're going to keep rates higher for longer. And that means less bank lending and probably less consumer credit utilization as well. Not great for merchants.
Hey, we had Mike McKee on earlier, but he made the point yesterday during his turn to speak that we haven't seen rates come down.
Consumer rates,
Consumer rates, yeah, excuse me. Thank you, Carol. Consumer rates come down when we're talking mortgages, when we're talking credit cards, and the like. How are you looking at that over at VantageScore and what that means for your, well, I was going to say your clients, your customers, but kind of like we're all, you have a view of all of us, whether we know it or not.
Yes, very much so. As you mentioned, VantageScore is the largest national credit scoring company, and we take data from TransUnion, Experian, and Equifax to assess the health of the consumer. And lower interest rates, the cut was anticipated. The cut that happened this week was anticipated. And if you look back at November, basically, banks anticipated it, and they actually opened up more credit accounts. New credit card accounts in particular were up modestly in November. But consumers only spent slightly more. Credit card balances were up a little bit, about $30 November compared to October, and about $200 year over year. And so overall, the interest rates and the expected cut tended to increase new credit accounts and increase spending a little bit, but not a lot. And so that's not necessarily bad news. In some ways, it's good news. Consumers are being disciplined about their credit utilization, not getting in over their heads. And banks are also somewhat modestly increasing credit lines, but still being cautious. And we're going to expect to see that continue into next year.
Yeah, I'm just listening to you, and I am curious, the number of accounts being opened, is that a good sign because people can do it and they get approval? Is it a bad sign because people are opening up new accounts so that they can find new places to spend and create bigger credit? So help us understand the data that you get. You get so much in real time. It feels like. What are the words that you use to describe the consumer credit picture right now?
Well, I would say it's healthy. A low credit score for a consumer is 300. The maximum possible credit score is VantageScore 850. And the average consumer was 702 through the end of November. And that's, the earnest start of the holiday spending season. So consumers are credit healthy. And we're seeing modest increases in consumer spending, and we're also seeing modest increases in consumer lending. So overall, steady as she goes, for sure. The challenge is, as you look to next year, the news we got this week from the Fed is they anticipate inflation to be much more a significant issue than before the election. And so that's the main area for concern as we go forward. Is the Fed going to be able to tame interest rates? Because if those interest rates, those inflation rates get out of control, they're not going to be able to cut interest rates as much and as aggressively as they signaled to us before.
You mentioned 702 for the average VantageScore 4.0 credit score. Carol and I just both saying to each other, That seems high, given that the highest you could get is 850. Yeah, is that high? That seems high for average.
You're absolutely right, and it's high by historical standards. And what that tells you is consumers overall are actually very credit healthy. They're managing their credit cards well. They're not getting in over their head on personal loans or their mortgage, and that's a really good thing. And I think that's a bit of what's been lost as we saw the wild swings in the stock market since the Fed announced its 0.25% cut. What's lost in all of that market swooning is the fact that overall the economy is doing very well and consumers are actually doing very well. And the key problem that the economy is facing is making sure that inflation doesn't get out of control. That's obviously that reaction to inflation is what impacted the election, and it's the main thing that all the new members of Congress are thinking about. It's what the president-elect is thinking about, and it's certainly what the Fed is focused on, is just managing that inflation so it doesn't get out of control. But the reality is we got a great economy right now.
Silvio, tell us though, what do you know about the demographics of the folks that from the data that you get and the credit scores that are issued? Like, what do we know about that pool of people? Because I also do wonder, and something Tim and I talk a lot about, folks at Bloomberg talk a lot about, is the underbanked, folks that maybe can't get that credit card, so they're not even in that average score statistical bunch, if you will. So give us an idea of what you know about the demographics of your business and the people that you basically rank.
Well, that's one of the advantages of the VantageScore. We actually include a lot of people that traditionally were left out of credit scores. We actually include about 30 million more consumers. Many of those consumers are folks that historically didn't get a credit score, but we're able to score them using our advanced techniques. And, if you think about the average consumer overall, they are, in fact, doing better than they were a year ago. And they're actually using credit slightly more than they were a year ago. And that's the high end as well as the low end consumer when they can't access that credit. So we're seeing a pretty uniform picture. Overall, consumers doing modestly better than they were a year ago. The key, though, as we look into the new year, what we're expecting is the Fed is going to keep interest rates higher for longer. And what that's going to mean is fewer consumers are going to get new credit accounts, and that's going to disproportionately impact the low end. But it also means that the high-end consumer, they're going to be more reluctant to use credit.
Hey, I'm curious about buy now, pay later and those types of firms. The sort of like instant credit that's offered at checkout at places. Are they using VantageScore?
Absolutely. Many of those firms use a credit score to manage the access to new BNPL accounts. However, many of those firms, buy now, pay later companies, they don't provide data on the performance of those loans. And that is a blind spot for the industry that we're working on, because as that has grown, the utilization of buy now, pay later, you want to get the data on whether people are actually paying up in 3 or 4 installments.
Are they?
Well, it's tough to tell. What we can see is that overall delinquencies, that's the industry jargon for whether people pay their credit card loans on time. Those delinquencies are actually pretty good. And in fact, they're better than the pre-pandemic averages. And they're holding steady. We saw that in the most recent November CreditGauge. And what that shows is, again, consumers remain credit healthy. We're not seeing a significant deterioration in delinquencies. And that's actually very good news for the economy.
Hey, when it starts to go bad, though, does it all of a sudden turn quickly? Like, do you guys get indications that, all right, we got some trouble here when it comes to consumer credit? Tell us about kind of that ability to kind of forecast. Because I know in some indicators, when they start to go bad, they go bad really quickly, and then they just drop off.
Well, and we've certainly seen that. There's been a period of unprecedented credit volatility over the last 2 to 3 years.
Mm-hmm.
Things do change quite rapidly. And it's one of the reasons why we are seeing our customers, banks, our stakeholders in Congress and at the Federal Reserve, we're seeing them turn to more high frequency data. You got to check what's happening in the market more regularly. It's one of the reasons that VantageScore was an industry leader in publishing insights on a monthly basis. We call that VantageScore CreditGauge. And in fact, we're publishing that tomorrow morning. The data I'm sharing with you is an exclusive that we provided to Bloomberg in advance. But the reality is, if you're a bank, if you are a policymaker, you got to be checking more regularly because things move quickly. And I actually anticipate that's going to accelerate. Things are going to move even more quickly as we head into 2025. New administration, new regulators, new policymakers, all of that is going to bring more
Just a few things going on in the new year, no doubt about it. Silvio, thank you so much. Have a good holiday. Happy New Year. Silvio Tavares, he's Chief Executive Officer of VantageScore, joining us on this Thursday from San Francisco.
Let's take a look at the markets as we do get